year, the who's who of the asset management world make their annual pilgrimage to the CFA Institute annual conference. And this year it was held in Montreal, Canada. Everyone from hedge fund managers, asset managers, and billionaire investors were in attendance to gain some wisdom from this year's lineup of presenters. This year, our own financial planner Ben Crow attended this prestigious event to gain some first-hand insights. Ben's joined us today, and Ben, having just returned from the conference, what was the biggest thing you took away from this week of learning?
The importance and value of thinking global, whether it be central bank officials who make decisions on monetary policy or the largest pension fund managers on the planet.
Can you give examples?
From an investment perspective, it may be the best pockets of growth or undervalued opportunities are occurring in other regions of the world. Brazil, for example, may be contracting as an economy, but its infrastructure assets may represent good value. On the other hand, we could take Philippines, tremendous job growth. JP Morgan, for example, has 50,000 staff based in Manila, servicing its US clients 24 hours a day. During
the conference, you heard various speakers. I believe you're privileged to hear Michael Pettis, a professor of international finance from Peking University. He had some interesting comments about China's journey compared to those of Japan and the Soviet Union. Can you tell us a little about his comments?
Michael explained that China over the past 4 decades has followed an economic development model that we do know a lot about. It's a model for growth that came from Ukrainian economist Alexander Gerschenkron, and there have been 30 such examples of other countries over the past 100 years that have followed and implemented this exact same model. We typically overestimate the potential of it. In the 1950s, the Soviet Union was going to become the largest economy in the world. In the late 1980s, Japan was going to become the largest economy in the world. Now, it's very likely that China's growth rates will rebalance lower over time. However, the economy is shifting towards a consumption base.
Okay, so are you saying that whenever an economy is going to be the biggest in the world, invariably it always then adjusts?
There will typically be a natural readjustment and rebalancing towards more longer-term sustainable growth rates.
So for China?
Over time, if we look at the more developed nations, 3%, 3 to 4%. China currently headline growth rate 6.7 or 8%. We would expect it to follow those longer term trends, which has been the case in every of those other 30 examples.
That's a very interesting observation. I believe you also heard David Rubenstein, who has a personal fortune of $3 billion and manages around $200 billion in assets. Now, he had some interesting insights on sectors he thinks offer investment opportunities, and I believe he also threw in some career advice. Tell us about him.
Yeah, from an investment perspective, he said the US, based on its favourable rule of law, China is a $1 trillion economy with extremely large consumer base. Social media, for example, helping people make global connections without borders, and really saw the opportunity in healthcare sectors and also the demographic shift with the baby boom generation, which is the wealthiest generation, accounting for 19% of GDP share, which has increased from about 10% GDP share.
What about the career advice?
So David's career advice was to do something that you love, as nobody won a Nobel Prize working 9 to 5. He was of the opinion that your career would take off after age 30, and he didn't embark on his current career path and start the Carlyle Group until he was age 37. He couldn't emphasise the importance enough of good communication, but also the desire to give back and contribute through your work and also companies that you invest in.
So if he didn't start till he was 37, what did he do before that?
He was a political advisor under the Jimmy Carter administration back in the 1980s.
Well, he's had an interesting life. So too, Sir Bob Geldolf, who I believe talked to you about some interesting topics. Tell me about Sir Bob.
So Bob is a fascinating character, and he moved to Africa in the late 1980s after very sadly seeing the television footage of a famine-devastated Ethiopia. 3 decades later, and he's heavily actively investing in the African region for the great growth potential that he sees there.
What is that? The great growth potential, what's that?
For example, if we look at the world's arable land, 60% is based on the African continent. And with the planet's resources finite, Bob is of the opinion that we'll all be going there in some way, shape or form.
If you said 60% of the world's arable land is in Africa.
Correct.
That means it's great investment opportunity, isn't it?
Correct. And with consumption expected to grow by 1,200% into the year 2100, and we consider that from 1500 to 1820, GDP growth averaged 0.5% per annum, there's quite tremendous upside.
Amazing. Thanks, Ben. You obviously had lots to think about and bring back. My name's Greg Ross. Thank you for listening, and I wish you all the best in your investment endeavours. AJ Financial Planning is committed to sending their team around the world to events such as these to seek the latest investment ideas, training and trends. And they strongly believe that this point of difference sets them apart and keeps AJ Financial Planning ahead in their field. As Warren Buffett famously said, risk comes from not knowing what you're doing. So put your financial dreams and aspirations in safe hands and speak to the team at AJ Financial Planning. The advice provided on this program is general advice only. It has been prepared without taking into account your objectives, financial situation or needs. So before acting on this advice, you should consider the appropriateness of the advice and consult a finance professional. If any products are detailed on this program, you should obtain a product disclosure statement relating to the products and consider its contents before making any decisions. Where quoted, past performance is not indicative of future performance.